Hello, good morning, and you're watching Market Cafe on ET Now with me, Vinny Motiwala, along with me, Lisa as well. Lisa, very good morning to you as well. Firstly, happy Monday to all our viewers because we're hoping for a happy Monday. But what was the handover that we got, right, from the US markets, the European markets on Friday? How did they even close? What is the indication they're getting? Because right now, the implied Nifty is showing a bit of a red there, but what is the US market?
Yeah, like you said, hoping for a happy Monday because last week it saw a brutal sell-off in the international market and the US market. All the three indices, they closed lower after witnessing a deep sell-off. The Dow, S&P, they all were down more than 2%, and even if we see for the year also, Dow, Nasdaq, they fell, S&P, they fell more than 10%. Talking about Dow, it was pressured mainly by the decline seen after JP Morgan Chase CEO Jamie Dimon. He said that he plans to sell around 1 million shares next year. So Dow was heavily pressurized because of that. And even for the month, we are closing the month. So even for the month also, we see it will be the third straight negative month for all the three indices. So yes, that was for the market. But talking about the stock futures, we are seeing some green. It's trading flat but with a positive bias. And this is ahead of the big week. We have the FOMC rate decision, jobs data, as well as big earnings like Apple. So yes, Fed decision, it looms on Monday, and investors are hoping after seeing the high interest rates, the high treasury yields surging, they are hoping that the Fed will keep the rates intact. And even the jobs data, they are hoping that the jobs data will not come out that strong and Fed will be comfortable in keeping the rates unchanged. So that was largely on the US handover. Talking about the Europe market, for the week it closed lower as investors are assessing the global earnings, as well as there was earnings like Sanofi which fell around 19%, and we had even the other earnings. It was quite mixed for the European market. So Vinny, that's largely the handover coming in from the European as well as US market. But what about the crude and other commodity check? What are they doing?
So as of now, when you're looking at crude, clearly we're seeing that crude has seen a bit of a decline coming in this morning as well. They're edging lower after Israel deepens the war with Hamas. Now, obviously, crude has dropped below that $90 per barrel mark this morning. Traders are assessing that war risk as well. There's a lot of uncertainty that has come in. So that is what they are still watching out for. Let's keep an eye out on that one. When I'm seeing the WTI crude oil prices, let me look at that. That is at around $84, 84.9. So just slightly below that $85 per barrel mark as well. And obviously, everyone's quite cautious on the situation with the war. Like you were mentioning, Lisa, as of now as well, that, it's an important and a very data-heavy week as well. So all those factors also surely keep the crude oil prices under check as well. As of now, we're watching out for that Fed policy meeting, China's manufacturing data, jobs data, and the geopolitical tension in the Middle East, how that actually shapes up is keeping the crude oil prices a bit under check. Brent crude oil prices, like I mentioned, is at $90 per barrel mark as well. So let's keep an eye out on the crude oil prices as of now. I want to just also check what is gold doing, right? Because when at such an uncertain time, normally you see a lot of, demand moving towards the safe haven. And like you can see, gold has again gained. It's above the $2,000 per ounce mark. As of now, it's at 2012, up 0.7% this morning in Asia trade as well. Middle East risk is keeping the focus on gold as well, the safe haven demand over there. So keeping an eye out on the commodities. Crude, a bit of a correction. Gold continuing to see a rise, given the shift that we would see coming in for safe haven demand.
Right, Winnie. So also let us see what's happening this week, starting with the US. As we highlighted earlier, the FOMC rate decision will be marked on November 1st. We have the PMI data as well coming in, the jobless claims. And also back home, the fiscal deficit, PMI data again for India, both on the composite as well as manufacturing data. In UK, we have the Bank of England rate decision on November 2nd, as well as the Eurozone economic confidence, consumer confidence that will be out. 31st October, we have the CPI data for UK, as well as the S&P 5 in China. We have the manufacturing PM, the non-PMI data coming in, and so that's largely on the global cues that will the global data that will be coming out. But on the earnings, we have HSBC, McDonald's that will be reporting their earnings. Then we have Larsen, Pfizer, Starbucks, Apple, Gartner that will be reporting their earnings. Back home, major Nifty earnings, UPL, Tata Consumer, L&T will be reporting their earnings, Sun Pharma, along with Sun Pharma, Tata Steel, Tata Motors. So it will be a heavily packed week for earnings. On the IPO front, the lock-in, it opens for the lock-in date. It opens for JSW Infra and also for Manoj Weber Gems. And on 31st October, on the other corporate action, we have Birlasoft that will be considering the interim equity dividend, and the lock-in opens for Yatharth Hospital as well. So yes, it's a heavily lined up for all these corporate action as well. And yes, on the IPO action front again, we have Cello World Limited IPO that will be opening their subscription, and that will be on between October 30th to November 1st. And also we have the Honasa Consumer Limited IPO that will be opening for subscription around the same time, Vinny.
Absolutely, keeping an eye out on two IPOs. One starting today, that's Cello, and tomorrow we have Hunasa that is opening for subscription. So exciting week in terms of the IPO world as well. But let's move on and get some top headlines coming in from the global world. And we have the Israel-Hamas war that has actually continued to rage. Over 8,000 Palestinians' lives have been lost. Now, the World Health Organization says it is deeply concerned about the situation. Meanwhile, the Director General of WHO, Dr. Tedros, has shared a humble plea for ceasefire and peace on X. Now, saddening as it is, according to NGOs, more children have been killed in Gaza in the last 3 weeks than the total killed in conflicts across the world every year since 2019. Israel continues to bomb Gaza with a particular focus on north of the enclave. Dozens of Palestinians killed and many others injured. Al-Quds Hospital is the latest under threat with bombing nearby and Israeli warnings to evacuate.
Well, and now shifting focus on the earnings, Ford has announced its Q3 earnings. The losses have widened in its EV segment, and this comes due to the pressure from the price war, which has been sparked by the industry leader Tesla. Meanwhile, Ford has also pulled its 2023 forecast lower, citing uncertainty over the pending ratification of its new labor deal with United Auto Workers Union. Now, the company's share that slid around 4% following this news flow.
And in a very exclusive chat, Bhavesh Agarwal, founder and CEO at Ola Electric, speaks to Nikunj Dalmia, managing editor of ET Now. They discuss the company's plans in the EV scooter space and also touches upon the demand for festive season. So let's go cross and listen in.
This is India's EV moment. This is festive season also. Abhi just Navratre khatam hui hai. And we announced this fundraise. It's very exciting that our investors are continuing to very significantly back our strategy and our vision for electrifying India. And also consumers are really, putting their money where their mouth is. This time, festive seasons for EVs has just been through the roof. Even compared to last year, we've grown more than 2.5 times. So it is really festive season, and India's EV moment is here.
I guess one word we both understand is we are talking about this year, Bhavesh Bhai, is climate change. And I think the impact of climate change is that ice has started melting. And I think that clearly seems to be the factor at play when it comes to the entire two-wheeler market. The data what we have seems to be indicating that Ola has sold one scooter in every 10 seconds. And Diwali Dashera was dhamakedar and Diwali will be dhamakedar.
Absolutely, Nikunj. The consumer is ready to end ice age. Forget whether Ola or the ice players are ready or not. Consumer ने अब ठान लिया कि अब future electric है. हम आप किसी भी बड़े शहर में, छोटे शहर में, गांव में जाके पूछो, सबको इलेक्ट्रिक के बारे में पता है. And सबको इलेक्ट्रिक खरीदना है. They're just waiting for the right product or the right moment or the right financing, etc. to tie up. And it is an absolute tsunami of electric in interest and conversion in the consumer mind. And this was represented very well in this Navratre and the Shera period. We had a very bumper sales. Even compared to last year, we sold almost 2.5 times, despite not being very, we didn't do any advertising or anything, but we sold a very large number of scooters. And we've also expanded our product portfolio over the last, 15th August, we announced a much broader portfolio for more price points for consumers to adopt EVs and EV scooters. So our forecast on EV scooters continues to be very excited, very bullish. And just like the dinosaurs went extinct, this time the ice cubes are finally melting. And unless the ice folks, if they only make noise like their vehicles, they will just be stuck and become like dinosaurs. It's time for them to adapt and move forward with the times.
According to you, what currently is the EV market share in the total two-wheeler basket, and 3-4 years from now, how large it could become?
If you look at the overall two-wheeler, including scooters and motorbikes, the EV penetration would be about 6-7%. But if you look at only the scooter, because in motorbikes, we still don't have any credible products. And our motorbikes were announced 2 months ago. We will be bringing them towards the end of next year. But if you look at only the scooter penetration of EVs, it's actually getting closer to 20%. And in some cities like Bangalore and others, it's actually touching 40-50%. So in scooters, I feel the EV penetration is absolutely at the edge of a very significant takeoff. And if you look at how EV penetration has grown across economies in the world, let's take China. Once you get to 10, 15, 20% in a particular category, then from there to much higher is a very fast journey. Because आप consumer का भी mindset सोच सकते हैं, जो scooter खरीद रहा है, अगर आज उसको दिख रहा है कि यार almost आजू बाजू सब लोग EV खरीद रहे हैं, एंड अगर मैं आज आइस खरीदूंगा तो 4 साल बाद तो मेरे आइस की रीसेल वैल्यू 0 है. So the ICE products in each of these categories, as EV adoption increases, the ICE resale value is going to drop off a cliff, because EVs are going to make it so much more redundant faster. So the ICE industry will see a much more bigger shock as the EV penetration gets closer to 20-30% in each category. And scooters, it's already there.
You know, Diwali is round the corner, so everybody wants to know what are Bhavesh Agrawal's plan for Diwali? Only mithai, naye kapde, or everything else?
अच्छे कपड़े पहनेंगे, मिठाई खाएंगे, दोस्तों के साथ, परिवार वालों के साथ थोड़ा खुशियां शेयर करेंगे और बिजनेस पे फोकस करेंगे. This is going to be this quarter is a very exciting quarter for us as a company, as a group. We've launched our scooter business continues to scale very fast. I spend a lot of time in the factory just making sure we are ramping up the factory well. Our mobility business is doing well. We are focused on electrifying ride hailing in a very big way. Starting with the two-wheeler segment, we've made a very big push to electrify two-wheeler ride hailing as well as two-wheeler logistics across the country. And as a group, we can bring both the ride-hailing and network part of the requirement, as well as the electric vehicle and the cell. So we have all kind of capabilities to achieve electrifying of commercial vehicles across India. And you'll see some very exciting announcements from us in the AI domain also. We are looking to build India's own stack for AI compute, starting with the AI and then the infrastructure and also our own silicon design. So we have a busy time ahead for us as a organization.
If you have to send a Diwali gift to some of your peers, promoters of companies who currently are still in the dinosaur age, what would you send them as Diwali gift?
हाँ, देखो दिवाली खुशियों का त्योहार है यार, तो मैं I don't want to attack below the belt, but I'll send them one of my electric scooters. Maybe it'll inspire them to make their own.
Well, with that, let's slip into a short break and stay tuned on the show as we mark the Asia market post the break.
Welcome back, and you're watching Market Cafe on ET. Now let's talk more stock specific, and especially talking about the pharma space. Why is that so? Because we had Dr. Reddy's as well as Cipla, which reported their numbers on Friday. While Cipla was a good set of numbers, Dr. Reddy seemed like a stable quarter coming in for that company as well. Let's go across to Shrishti, who's joining in with us to give us an understanding and breakdown on both the numbers of Dr. Reddy's as well as Cipla. Shrishti?
Well, yes, talking about the earnings of the pharma majors. Firstly, let's shift focus to Cipla. Then a great set of numbers being reported by the company, a beat on all the parameters. The margins have been coming in at of 26% versus our estimate of 23.7%. So beat on all the parameters, a growth coming in on the US business, 3% sequential jump. We have seen a double-digit growth on their India business. But what's interesting is that the company has raised its margin guidance for FY24, and that's the second consecutive quarter that the company has done so, because last time they guided for a 23% EBITDA margin guidance. They are now seeing it around 24 to 25% range. Not just that, they have also raised their US quarterly sales guidance, which was now earlier at $205 to $210 million. Now they are looking US quarterly run rate of $220 to $225 million. So that's really great to hear that the management is confident on the growth trajectory for their margin, as well as US business, on their India business that continues to perform well, as well as talking on the stake sale. We didn't get any comment from the management, so that's a development that's really we are still tracking on. But shifting focus to Dr. Reddy's now, this particular time, the company reported a decent set. Sequentially, a revenue jump of 2% is what we have seen. EBITDA has shown a degrowth of close to 3%, and the margins have seen a dip from 30.4% in Q1 FY24 to 28.9% this time around. But this was on the expected line. And lastly, onto the profit figure, a 5% jump on the reported profit is what the company has clocked in. But do remember that the other income is actually up 8 times on a YY basis. And other than that, the company has also recognized a PLI benefit of 193 crores. So adjusting to that, the profit figure has come in line to the estimates. The US business was quite subdued. No major push coming in from the India business as well. So I would say a decent set coming in from Dr. Reddy's. So that's the update on both the pharma majors.
Well, thank you, Srishti, for taking us through the numbers of both these pharma counters. But you also track the auto sector, and Maruti has handed in a strong set of earnings for the second quarter. It was a record quarter for Maruti because the automaker, they reported highest ever sales volume, net sales as well as profit. In fact, the profit for the quarter, it rose more than 80% on a year-on-year basis. So break down the numbers for us for Maruti, Srishti.
When we talk about the numbers, then the kind of a volume jump that the company has seen was 7% on a YY basis, and sequentially the volumes were up 11%. So the richer product mix, because we were expecting that the SUV sales mix has gone up, so that will really support the margins. But the street was expecting the margin to be around 11 to 11.5%. We at TT now estimated EBITDA margin of 11%. But look at the surprise coming in, almost a 13% margin is what the company has clocked in on that particular front, where the company says that the higher other operating income, the richer product mix, the cool off in the raw material cost prices, all these factors have supported the margin. So that's really a surprising factor. And this time around, the stock is not just the stock is at a record high level. If we look at the other quarterly earnings from the likes of revenue, profit, margins, they all are seen to be hitting a record high level for themselves. Highest ever quarterly sales volume, net sales and net profit for the quarter, registered the highest sales owing to the higher sales volume and product mix, and achieved the market share of 23.3% in the SUV segment. The revenue has seen a jump of 15% on a sequential basis, EBITDA jump of 60%, margins like I told you close to 13%, and the profit figure has seen a jump of 50% on a sequential basis. So on all the parameters, there is a beat by Maruti Suzuki. The material cost has also cooled off to 73.5% this time around, and that's a cool off of almost 30 basis points on a YY basis. So all these factors have really supported the Maruti Suzuki earnings, and definitely autos are on the roll today.
Okay, that's about Maruti, but let's talk about Reliance, right? They posted an in-line set of numbers this time in the second quarter. What more details are coming in from Reliance? Let's go across to my colleague Somit, who's joining in with us to break down the numbers. Somit?
Well, in the second quarter, if you see, Reliance Industries has reported pretty much in-line set of numbers. The EBITDA has increased by around 8% on a sequential basis, while the net profit has increased by around 9%, and this is what the street was also expecting on a consolidated basis. Now, segment-wise performance, if you see, the O2C segment performance has been 7% higher on a sequential basis, and a marginal beat, in fact, I would say, to street estimates, and this is largely in the back of the fact that the Singapore gross refining margins were higher on a sequential basis, which aided the O2C segment. When it comes to the gas exploration segment that has reported the highest sequential growth of around 19%, but the absolute number that has come in at close to 4,766 crore rupees. This is a marginal miss than what the street was expecting. Now, whatever growth that we have seen in the gas exploration business is purely because of higher gas prices and higher gas production. When it comes to the retail segment, that has reported a strong growth and a marginal beat to street estimates, 13% higher on a sequential basis. The number has come in at close to 5,831 crore rupees. The margins are also at an all-time high of 7.6%, and this is largely because of higher footfall and the store expansion plans of the company. Now, when it comes to the telecom arm of Reliance Industries, now that has reported pretty much inline set of numbers. The revenues have increased by 3%. EBITDA is also 3% higher. Net profit has come in 4% higher at close to 5,058 crore rupees. But the ARPU number, that is the average revenue per user per month, now that has come in marginally below than what the street was expecting at close to 181 rupees. But if you see the subscriber growth, that has been stellar for Reliance Industries. 6th consecutive quarter of subscriber addition, around 11 million subscribers they have added in the second quarter of FY24, ahead of what the street was expecting. And the miss in ARPU number was actually offset by the higher subscriber addition for Reliance Jio, and hence a pretty much inline set of numbers from Reliance Jio as well. To sum it up, for Reliance Industries segment wise, O2C was a marginal beat, retail segment was a marginal beat, the gas exploration was a marginal miss, telecom was pretty much in line, and on consolidated basis, Reliance Industries has also reported inline set of numbers.
Well, thank you so much for taking us through the earnings of Reliance. Reliance will definitely be in focus today, but let's see what brokerages are talking about Reliance, starting with Nomura. They have maintained a buy with a target price of 2,925, and according to them, the inline set of numbers that is reflecting healthy growth across all the segments. Even the net debt that has moderated, while the FCF that remains on the negative territory. While Jefferies has also maintained a buy, but they have hiked the target price to 3,000 rupees. They said that EBITDA rise that is marginally ahead of their estimates, and Reliance Jio also saw healthy subscription addition. ARPU, however, that was a miss on the back of adverse mix. And O2C profitability, as Sumit pointed out, that it was a beat that jumped on refining petchem spreads, and Macquarie has also upgraded Reliance to neutral from underperform earlier, and they have hiked the target price to 2,200 from 2,100 earlier, and the inline set of numbers that has evidenced a strong earnings outlook for Reliance going forward. So that's largely what the brokerages are talking about Reliance, Winnie.
Absolutely, but let's go across to Somit again to tell us about Reliance Jio's numbers specifically as well and how they were looking like.
Well, on a data wise, if you see, yes, the profit growth might have been the slowest, but this is what the street was also expecting from Reliance Jio in the second quarter. Now, one of the reasons behind the slower profit growth is the fact that the company has not taken any tariff hike, and hence if you see the ARPU growth, that has been a bit sluggish in the second quarter as well. But it is the subscriber addition that has been aiding Reliance Jio numbers in the second quarter, and they have added around 11 million subscribers, and that is what has aided the numbers. So though the growth might be the slowest for Reliance Jio in the second quarter, but this is what the street was expecting. So no surprises or no disappointment from Reliance Jio numbers.
Well, with that, let's slip into a short break, and post the break, we will mark what stocks will be in action, what will be the potential buzzer. So stay tuned on the show. Welcome back to the show, and we are on that part of the show where we take you through all those stocks that will be buzzing in trade today. But before that, let's see what's on the F&O front, and we have Harsh here in the studio right here. Good morning, Harsh. Harsh, take us to this F&O snapshot.
Well, yeah, so let's talk about levels. We saw on Friday that there was some amount of pullback which we witnessed above, the Nifty broke above that 19,000 mark, psychological barrier broken. And there was some mild short covering which was seen in the Nifty futures with open interest which was up by around 1% or thereabouts. Whereas on the options front, we saw very active call buying happening at the 19,200 strike. This indicated some expectation of the Nifty going around this level. But now let's shift focus on what the FIIs are really doing. So in the index option space, they added around 1.8 lakh contracts, indicating that put traders are expecting indices to fall. But at the same time, we are seeing put shorts also getting added, 2.5 lakh contracts added over there. So that largely indicates that indices may fall, but not to a larger extent. So we may not really see a huge fall. In a nutshell, the F&O data is showing mixed signals. This is just because the Nifty is at that 19,000 odd mark. Traders are speculating on both sides at the same time. That's largely what indicators are suggesting.
Okay, Harsh, thank you so much for that, and thank you so much for joining in with us this morning. But let's move on because we have a lot of action happening in the IPO world, and today Solo World opens for subscription. That is on the 30th of October to the 1st of November. That will be opening for subscription, and then when you look at in terms of the price band as well, it is at 617 to 648 as well. So let's keep an eye out on that. It's going to be an exciting IPO. Now, in terms of the breakup of the revenue, normally we all have used the Cello World pens at home, but let's not forget the most of their business comes from houseware as glassware as well, and that accounts to around 65.7% of their revenues. Other than that, we also have writing instruments, that's pens, which accounts to around 16% of their revenues, and furnitures and allied products accounts to 18.4% of their revenues. The IPO size for Cello World is at 1,900 crores, and overall, obviously, it's a complete OFS that we're keeping an eye out on. So yes, nothing is going to be going to the company. Revenue trends also seems like the margins have been a bit in that range of 26% in the last couple of years as well. 25 to 26% is what the margins of the company has remained in. And peer comparison, when you look at it, Cello World is around in terms of revenues is at 1,796 crores in FY23 versus peers whether Borosil or a La Opala, all of them are much lower in terms of revenues, at least compared to a Cello World. So let's keep an eye out on that one, because the ROCE, that's the return on capital employed, also is at 58 times versus its peers. It's much lower. So it's going to be interesting to see how this IPO is it, what is the valuation it comes it as. It's going to be very exciting to see, Lisa.
Well, yes, and staying with the IPO front, after a successful reverse merger, Max Estates will be listing on the exchanges today. Now, how does the new structure at Max Ventures that may affect shareholders? Vamakshi is here to explain all of those.
Well, yes, Max Estates is in focus today, and that is because the company will be listing on exchanges after successful conclusion of the reverse merger between Max Ventures as well as its subsidiaries, that is Max Estates. Now, the composite scheme of amalgamation, if you remember, was approved by the NCLT Chandigarh bench PAC in July 31st, 2023, and in fact, trading in Max Ventures consequently was suspended on August 10th, 2023 on account of some procedural reasons. And when we look at the share price on that day, it was actually at an all-time high at around 216 rupees per share. Now let's take a step back and understand how the overall company structure for Max Ventures has actually undergone a change over the last few years. Now earlier the company had two business segments, that is the specialty packaging films, which was a JV with Japanese firm Topan Printing, and the real estate business that was under Max Estates. Now the company actually went ahead and divested nearly 51% of its holding to Topan Printing for nearly 600 to 650 odd crores, and this was in the specialty packaging business, and this was done in order to focus fully on the real estate segment. So now when the reverse merger is taking place, the idea behind the reverse merger is to actually remove the holding company structure, because essentially now under Max Ventures there's only Max Estates, which is the real estate company. So with the reverse merger going through, the holding company structure goes away, and in fact Max Estate now directly gets listed on the stock exchanges. Now the conversion ratio is around 1:1, and for existing shareholders of Max Ventures nothing actually changes. It's only the name that changes technically. So all in all, on the back of Max Estates making a comeback on the exchanges, keep an eye out on this counter.
Okay, Vamakshi, we're surely keeping an eye out on that one, but we're also keeping an eye out on AU Small Finance Bank today, especially because Fincare Small Finance Bank is to merge with AU Small Finance Bank. Vamakshi, one, what does it mean for the shareholders? What is the deal and how is it going to be happening as well as what will be the synergies that we'll be seeing shaping up here?
Well, yes, AU Small Finance Bank has announced its merger with Fincare Small Finance Bank in an all-share deal, and in fact the scheme is subject to shareholders, RBI as well as the CCI approval, and the merger is slated to take effect from February 1st, 2024, subject subject to all requisite approvals. Now, according to the terms of the agreement, shareholders of Fincare SFB are expected to receive nearly 579 shares of AU Small Finance Bank for every 2,000 shares they hold in Fincare SFB. Now, Fincare SFB is valued at close to around 4,409 odd crores with a price to book of almost 2.9 times. In fact, the company is also expected to infuse nearly 700 odd crores. Now, let's also look at what the strength of the merged entity will look like. So, on a pro forma basis, the merged entity is expected to have nearly 2,300 touchpoints, 98 lakh customers, and 43,000 employees. In fact, the combined balance sheet strength of the merged entity will be 1.1 lakh crore as on September 2023. Now, let's also assess the impact that would be seen as far as some of the shareholders are concerned. Now, post-transaction, existing shareholders of Fincare SFB are expected to hold nearly 9.9% stake in AU Small Finance Bank, and for AU Small Finance Bank specifically, the transaction could be accretive by almost 7.3% on the book value. Now, as far as the synergies are concerned, Fincare does bring in deeper presence in the southern as well as the eastern states. Apart from that, AU Small Finance Bank in the past had stated that they were always on the lookout for a microfinance lender in order to strengthen their product offerings. In fact, as for pro forma financials, the return on assets is expected to see an improvement of almost 20 basis points for AU Small Finance Bank. So, all in all, the merger is expected to go through come February 1st, 2024. It is expected to be book value as well as ROA accretive for AU Small Finance Bank, and on the back of this transaction, keep an eye out on that counter.
Well, yes, so that was on AU Small Finance Bank acquisition, but Vamakshi, stay with us because M&M Finance also came out with their numbers, and it was a weak set of numbers that was reported by the company. The NII, the PAT, NIMS, that they all were below the street expectations, but the management is expecting the NIMS to rise by the end of FY24. So give us more details on the results coming in from M&M Finance.
Yes, a weak show is what M&M Financials posted this time around. Yes, the company reported weaker than expected numbers as far as the NII, NIMs, PPOP as well as the net profit is concerned. And let's look at some of the factors that are actually driving the company's weak performance. Let's first start off with the most important factor, that is the NIMs. They were impacted by almost 20 basis points sequentially, a double whammy coming here because on the asset side, yield did decline by almost 33 basis points sequentially, and that was mainly on account of a couple of factors such as the higher share of dealer funding, mainly owing to the festive period, as well as higher growth in auto UVs, which is a lower yielding segment, and that is mainly on account of higher competitiveness in this segment. Whereas when we look at on the liability sides, the management was actually expecting that the borrowing cost could actually start reducing for the company around the festive season, but instead the borrowing cost actually rose by almost 10 basis points sequentially. So all in all, that did create an impact on the NIMs, but the management is hopeful of a NIMs recovery to almost 6.8% by the end of FY24, and in fact they are expecting it to reach 7% by FY25 as the company is planning to take some hikes in the portfolio as well as increase the share of pre-owned vehicles in the portfolio, which is a relatively higher yielding segment. Apart from that, another factor that actually impacted the company's numbers were the credit costs. They came in at almost 2.3% on an annualized basis, and this was much higher than the company's own guidance of around 1.5 to 1.7%, but nevertheless the management is appearing to be quite confident of bringing back the credit cost to that level. In fact, the spike in credit cost actually led to the company missing its estimates on the net profit front. Apart from that, the company also toned down its growth guidance. AUM growth was almost at 27% this time around, which was driven by 32% increase in cars as well as the auto portfolio, but the management has in fact toned down its aspirations to nearly 20% as compared to 25% earlier. So all in all, yes, a weak show, but nevertheless the management did sound quite confident on the future outlook. They also highlighted that the second quarter performance could be mainly on account of seasonality factors, and apart from that they're expecting an improvement to come in the quarters ahead. But as of now, the stock could be under pressure on account of a weak set of numbers.
Vamakshi, for that. So M&M Finance is expected to be under pressure on the back of weak set of numbers, but Ultratech Cement also will be in focus, and that is because the company has approved the phase 3 expansion plans. This is for 21 MTPA, and it entails an investment of around 13,000 crore. It will be a mix of brownfield as well as greenfield project, and talking about the EV per ton, that's at around 590 crore. and that comes lower than the replacement cost. So the company mentioned that it involves setting up of 4 greenfield, 4 brownfield as well as greenfield bulk terminals, and with that the domestic grey cement capacity that will increase to around 182 metric tons per annum. Now this aligns with the vision that is foreseen by the company, by Ultratech Cement, and that it aligns with their long-term goal of reaching around 200 metric tons by FY30. So yes, that's positive news coming in for Ultratech, and the new capacity that is expected to go on stream by FY26. Let's see what brokerages also have to talk about this expansion plan coming in from Ultratech. So CLSA saying that capex implies a 9% capacity CAGR for Ultratech over the next 4 years, and it will enable the company to grow faster than the industry growth as well. And it also provides a long runway for growth, but could be an overhang for the industry utilization. So yes, Ultratech Cement will be on in focus on the back of this news flow.
Okay, surely keeping an eye out on Ultratech Cement as well in terms of the stocks that will be in focus today. But with that, viewers, we're absolutely out of time on this edition of Market Cafe on ET Now. It's a goodbye from Lisa, myself, as well as the team who put this show together. Don't go anywhere. The markets will take the action forward.